Hi everyone, this is a technical analysis on EURUSD. Let's start with some fundamental background first. The Fed is waiting for the totality of the data to be released before deciding what to do at their September meeting. As of now, the data supports the soft landing narrative as the disinflation in the core measures continues, but the strength in the labor market and consumer spending might keep inflation higher for longer. This is something that might translate into more rate hikes or a higher for longer stance. Recently, the long term Treasury yields have been rising non-stop, and this has benefited the US dollar, but the reason for such a rally is still unclear. The ECB, on the other hand, hiked by 25 bps and changed and aligned the statement to land more on the dovish side. President Lagarde didn't hint to what we can expect next, and in line with the Fed just reaffirmed the data dependency and kept all the options on the table. The data for the Eurozone has been consistently missing expectations, but the recent inflation and employment reports remain strong, justifying another rate hike in September, all else being equal. Now, on the daily chart, we can see that Euro USD broke through this trend line, retested it, and continued lower towards the next support at 10832. The sellers are in control, and the trend is clearly bearish as the price keeps printing lower lows and lower highs, with the moving averages crossed to the downside. The next big level will be the trend line around the 108 handle, as a break below it would open the door for a sell-off into the 10515 level. On the 4-hour chart, we can see that we've been diverging with the MACD for a while now. This is generally a sign of weakening momentum, often followed by pullbacks or reversals. In this case, we are likely to see the pullbacks, and the good resistance will be the one around the 10940 level, as we have the trend line and the 38.2% Fibonacci retracement level. This is where the sellers are likely to pile in, with a defined risk above the trend line, and target the 108 handle. On the 1-hour chart, we can see that the recent price action is forming a falling wedge. This is generally a reversal pattern, as we can notice that we have also the divergence with the MACD. The target is often the top of the wedge, which will coincide with the previously mentioned resistance around the 10940. The price will need to break above the trend line though to confirm the pullback into the resistance. Note also that the failed patterns can be even more meaningful as they tell you that the momentum is very strong and the market clearly wants to go into that direction.